Hello all, welcome to Billionaire. This is RP here, recording video on 8th of October 2022. We will be doing Nifty's analysis with price action and indicators. Then we'll check Elliott Wave. After that, we'll check option chain. So as usual, let's check first the previous week's analysis. In a previous week, we expected Nifty to first drop and then probably it could rise. That's what we said, unless and until it does not break the previous high. So it did give a sharp drop. We expected Nifty to drop towards 0.6 Fibonacci, or you could say somewhere near 16,900. So this was the last Friday's candle. It was highly bullish. All of us were thinking that it is a bullish engulfing candle and the fall has finished. It will break on the upside. So that's not the case. That's what we explained in our last week's video. So previous week's video is this one, which we uploaded on 1st of October. There we mentioned, if you are able to see here, that Nifty would go towards 0.6 Fibonacci of this entire rally. In last 1 hour, it has created an engulfing candle, and considering the downtrend, this looked more feasible. Okay, after this, it dropped and made a low near 16,850 somewhere. Okay, and then it gave a very big gap up. Okay, so this invalidated our expanded flat view. So here we were assuming expanded flat correction, okay, with A, B and C waves. Okay, so this is invalidated now, and this is A, B, C correction in the fourth wave. It has went near this, okay, and then it has started the dip. So let's discuss what is going to happen in the next week. Thanks all who added the comments and gave us the likes. So thanks all the participants who added the comments, or all the viewers who added the comments. So these comments motivates us to make sure you add the comments. Without wasting time, let's move further and check indicators and price action. So here, as you see, a better picture here can be seen from the moving averages front as well. So Nifty went above short-term moving averages 13 and 48. Okay, 48 is a yellow one and 13 is a blue one. Okay, so Nifty closed above that, but as you can see in SGX, it has started the dip and came close to 17,000. So still you can see the bearishness is not yet finished, and this could be a 5-year structure going down. So we'll discuss that in more detail later on. But for now, you can assume that Nifty is going to head towards 100 EMA and 200 EMA. So 100 EMA currently is at 17,090 and 200 EMA currently is near 16,900. So if it starts a dip, it can come between 17,100 and 16,900. Between these, it can find support. Maybe somewhere near 17,000, it should find the support, because on weekly option chain data, that can be a support. It can bounce and then could continue the dip. RSI is still below 50. That is a bearish signal. It's not yet bullish. Aron is completely bearish, and it is not at extreme bearish zone, but it is telling us that it is bearish to sideways market. So as per the price action and you can say moving averages, we can consider that Nifty is about to dip towards 17,000. SGX is already showing that. I know you might be thinking that I'm thinking from that perspective, but we can check the 0.6 Fibonacci as well. I'll tell you how it's going to act here. Okay, so another thing, I also have missed this opportunity because these two candles were not giving clear signals of fall. So I also have missed the opportunity. Whatever happens on Monday, it's not that I have forecasted, but I can tell you what can happen next if certain levels are broken. So we are going to discuss that now. So hope it's clear that Aron is still showing bearish to sideways market, and price action is showing us that we can dip towards 200 EMA, which is somewhere near 16,900. So let's check the Elliott Wave based analysis. So these are our previous charts. So this was chart on 27th August. We mentioned one low is yet to be made. 15,000 or 14,300 is still possible. There is no doubt about that. And the swing of 18,115, which was created on HDFC Bank merger news, has not been broken. Here it made a high somewhere near 18,096. So this high it has made like this, came like this, and then went like this. It made high and then dropped. Okay, so this high it has made, and it has not broken the swing. So that is another signal for us that there is a still possibility of break of this low. We discussed these things in our previous videos. You can watch those previous videos, visit our channel and look for the playlist which is weekly Nifty analysis. So this is Nifty's weekly analysis playlist. You can watch that, and you can watch our previous videos to find out the potential targets on the downside. So this was chart that we published on 17th of September, where we mentioned that this is an ending diagonal pattern and Nifty has made top here. That is 18,096 is the top, and more or less it will drop towards this. So this level was already achieved. Here also we gave the wave count from the bottom that this is kind of A, B and C correction going to the downside, and this is WXY correction which is in progress. Okay, so this is WXY. So the idea to use Elliott wave here is to find out how many swings are left and how many potential, like is the move from this particular point, from this low, is bullish or not. So that's what we are trying to find out. And I have concluded here that this is not a bullish move. Okay, so that's why it's possible that the drop will come and will break this level. So we discussed those things even here as well. Even here as well, many of them are thinking that all of these rallies were bullish rallies, but they were bearish traps, and Nifty is eventually coming down. That's what we discussed and gave a proper analysis for that. Okay, so these were the previous charts, and yeah, this was from 24th of September, where we mentioned Nifty would drop towards 1.6 Fibonacci 16,841, and Nifty has made low of 16,745. So these positional levels will help you very well to plan your trades or investments. So yeah, do make sure you remember all the details. So now for next week, we have two possibilities here. Okay, one is temporarily bearish and then making one more high. So this is the first possibility. Here we are assuming, if this is complicated chart, let me explain to you. So this is the main trend. Okay, so after 18,096 low, this is the main trend, which is downtrend. Okay, so here we can assume a less bearish case or a slow drop with the form of ABC correction. Okay, so this can be wave A, this can be wave B, and this here wave C finished. So this is 1 3-wave swing coming on the downside. Now the correction has begun also in the 3 swings. Okay, either it has ended here, or there is still chance that it will make couple more swings like this. Okay, so this is 3-wave swings again down, then 3-wave swings again up towards 0.6 Fibonacci or even beyond this. Okay, so 17,600 can come based on this pattern after it tests a low somewhere near 0.6 Fibonacci. Okay, so this is the 0.6 Fibonacci that I was talking about. So from this low to this high, when you plot Fibonacci between A, B and C wave, which is to which we are giving a label as W. Okay, ABC waves are called as W here, and then again ABC will come, which is called as X wave, and then again ABC will come. So this can be a double zigzag correction or a double complex correction. So that's possibilities there. So when you plot Fibonacci from this point to this point, you get 17,000 as 0.61 Fibonacci. So if it has to drop, it will come towards this. Okay, not in a straight line. It'll open small gap down. It'll fill that gap and then come down. It will not be a sharp drop. Even if that happens, it might find support here if this is the structure that we are thinking. Okay, so this is a less bearish structure where we are assuming it to make a low near 17,000, then again gave a 3-wave up move. Okay, notice here there is a negative divergence. So it's better to take trade in the direction of the trend, which is this downside major trend. So if you have taken the puts on the Fridays, then you are lucky, or you could say you have done your great analysis, and you are going to make good on Monday. So this is how one bearish case we are assuming. So in this case as well, after making ABC correction here, then again WXY correction like this, it is expecting to drop further on the downside, but this will be a slow drop. As I said, it will not break this low of 16,746. So how do we know that this case is happening? Okay, so let's assume the first 15 minutes it made a red candle somewhere near 17,000. Then there is a chance that it can dip 100 more points on the downside. You can grab those 100 points. So do make sure that the first 15-minute candle is red. To tell you the example, it can be like this. Okay, so here, okay, so on this day you can see it opened a gap up and the first 15-minute candle was bullish. The entire day it traded as a bullish on the upside. So here the first 15 candle was indecision, it went sideways and then dropped on the downside. So first 15-minute candle is important, and here on this day of gap down you can see the first 15-minute candle was indecision, then the next candle broke its low, then the dip continued in the next couple of sessions. So first 15 minutes to 1 hour will give you the idea whether it will sustain below 17,000 and will give you 100 to 200 points or not. So do watch the first 15-minute candle to better understand the move. Do check all previous gap downs and gap ups. Anytime it has first 15-minute candle bullish in the direction of the trend. So here it was gap up and then the rally continue on the upside. Here it was bearish hanging man and then it continued the dip on the downside. So this way you can analyze and see if the move is going to go in your favor or not. So in first 15 minutes it makes a bearish candle for then the drop will continue. Then there could be a second case that we are going to discuss next. If it forms a bullish candle somewhere near 16,950 or 17,000, if it opens gap down, then do make sure that it will head higher and do prepared. At least pullback it should give towards 17,200 or 17,170 levels. So be prepared for that and keep proper stop losses value while you trade. Second chart is like this. Okay, here still there is a bearish case left. So with this chart you will understand the importance of 1 point. Okay, so here notice that we have assumed wave 1 here, 2 here, 3 finished here. Earlier this was looking like, in last week it was looking like it is not a normal 3 wave, and we also mentioned that it is not extended 3 wave, but it is a normal 3 wave. And then there is a ABC correction coming in, and we were expecting it to go higher but not to break this level of 16,429. So remember the level 17,429. This is the level that was invalidation level of this chart. Okay, so this is wave 1, this is wave 2, this is wave 3, and this is wave 4. Check here, it has missed to break this level of 17,429 by 0.90 points. Okay, only 0.90 points were not were less to break and invalidate this chart. So that also didn't happen, and now it has given the dip. So this is the importance. So why that is important? Because Elliott wave suggests that the fourth wave, this is the fourth wave, cannot touch the first wave in the normal impulse pattern, and we are assuming this as an impulse pattern. So wave 1, 2, 3, 4, and 5. 1, 2, 3, 4, and 5. So this is the way market works as per the Elliott wave theory. Then there is a ABC correction. Okay, so this is the Elliott wave theory. So here the fourth wave, this fourth wave is not allowed to touch the top of wave 1. Otherwise, this is invalid wave count, and this Elliott wave impulse structure does not apply here. That's what the idea is. So by 1 point, it has missed to invalidate this chart. So this is still possible, and we can still head lower. We should expect a lower move on the downside. So right now, I cannot tell you that it will be exactly the fourth, fifth wave has started. But considering this downtrend, this has a more probability that it will make one more low below this and then give a pullback, and then again will drop sharp. So this will be sharp drop. Just remember, after a pullback, it will drop sharp. So we have to watch for one pullback as ABC wave after this fifth wave completion. So now I don't have exactly exact level for us to consider that the dip has started and fifth wave has started, but I can give you the level. If it breaks this, where it will stop. Okay, so it will stop near 16,600 or this channel low. So it will stop near channel low. So how the channel is plotted, 2 and 4th are connected, and then when we plot a line parallel to this on 3rd, you get this channel. So now this channel is where the 5th wave should end. Usually it does not go beyond the boundary of the channel, but it happens in case the 3rd is small and the 5th is about to extend. So if it about to extend, then definitely it is going towards 16,000. So this break of 16,600 by big margin, let's say it goes below 16,500, then there is a good chance that it will head towards this. There is no guarantee as such, but it can go towards this level. So on daily chart, MACD is already giving a red signal that it has given the crossover. So this drop can continue like this, break this, and head towards minimum 16,600 is the one thing that you have to remember for next session. So let's check more in detail how the wave count looks like. So obviously here the drop was not giving idea. Also, we didn't create any videos for Friday. So I couldn't tell you that it has missed to break this level, invalidation level of 16,429. So by 1 point, it has missed to go and break that level. So this can be, we call it as wave 1 and 2, then again 1, 2, okay, 1, 2, then 1, 2, like this. Okay, so the third wave is in progress right now. Okay, there is a possibility that this could be a third wave. Okay, and this could be fourth wave. Then it will give a fifth wave somewhere near, like it will drop small. In case it drops small, we have to watch these levels. In case it opens big gap down, then definitely it is heading towards 17,000. So any bounce if you get near 17,100 levels. So let's mark the levels here. Okay, the levels that we have here are important for us. Okay, so this is one area that we need to watch for, 17,037, and the second part is somewhere near. Okay, so these are the two areas. In case it opens gap down below 17,150, it can touch 17,170 and then continue the dip. Okay, so it can be this entire stuff can be wave A, B, and C, and then a bounce back will come. That's what we discussed, case 1. And the case 2 can be, this is an extended 1-2-1-2 wave sequence, and it will continue the dip beyond 16,900. So if it goes 16,000 below 900, there is a chance that it can fall further down towards 16,913 or even on the downside. So we have to watch these levels and understand the market scenario for next week, that it can be a very bearish breaking this low. I have considered this has more probability looking at Nifty failed to break this high of 17,429. So there is a good chance that it will break this in the next week itself and make a new low somewhere near 16,600 or even going downside. So now the last part of this video is on the option chain. So option chain suggests here that 17,000 is a major support, like 43 lakh put open interest is present. So on the put open interest side, whatever is formed is called as a support. So this is the major support for this expiry. Okay, and the second major support is at what is the support? Okay, so this was the support 17,200 because this is second biggest number, right? So this is getting broken, and people who shorted this put will have to shift to lower or book the losses. So this is going to be broken. So I'm not going to consider this 17,600 as a support, but this is the support. And then next is 16,800 where the support lies. You can see the mixed data, both call and put side, we have some open interest accumulated. Okay, so some people shorted, some people went long. So that's why this is the mixed data. Put side, you understand that 16,800 is a second major support and a major support is 17,000. On the upside, obviously 17,500 is a major resistance. And the second major resistance was 17,400. Nifty didn't went beyond this, and it was having a good resistance or equal resistance on both call and put side. So some action happened here we got couple of gap ups, but next we don't have a major resistance. Definitely they will make this as a resistance. Let's see what happens in the next 2 sessions. If it opens big gap down, then make sure to wait for pullback. Do not enter blindly. And if it opens flat, I don't think there is a possibility for that. But if it opens flat, it can head a little higher and then can drop on the downside. So just remember that if we start trading below 16,900, there is a potential chance of drop below 16,747 or 16,500 can also come. So do watch the level 16,900, which is another area for us to consider the more bearish view on the downside. So hope you like the analysis. If you have any doubts, ask in the comments. Thanks for watching. Bye-bye.